Six of the biggest banks in America have just reported their Q1 2026 earnings. And if you read into these numbers really closely, you're able to get a read as to what's actually really happening with the economy. You see, what these banks reveal in those numbers is what they're seeing when it comes to spending, lending, trading, and risk. And when you line up JPMorgan Chase, Bank of America, Morgan Stanley, Wells Fargo, Citigroup, and Goldman Sachs side by side, things all of a sudden start to become a little bit clear. Now, you see, some banks obviously are winning because of the market volatility. Some are obviously winning because of the increase in deal making, right? IPOs, mergers and acquisitions, and things like that. And with all of that going on, what I'm going to do in this video is I'm going to break down for every single bank their revenue, their net profit, and their stock performance. We'll also dive into some nuances that make that particular bank different. But more importantly, we want to dive into what these banks are quietly telling us about the market and where it's headed next. So if you stay with me until the end, you'll be able to gain some clarity on what we should expect to see going into the market. However, there's a lot of things happening in the geopolitical landscape, so you always need to take that into consideration. Now, before we jump into each bank, I just want you guys to understand something really, really important. Bank earnings are really driven by four core agents. Number one, the net interest income. So think of loans versus deposits. Number two, investment banking. So think mergers and acquisitions, IPOs, and deals. Number three, trading revenue. So if the market is moving up, banks are winning. And then number four, credit quality. Are people actually paying back their loans or people are defaulting? So when banks report strong earnings, the first question you need to be asking yourself is like, which of the four engines is really driving it? Because it's going to tell you whether the strength is sustainable for the long term or if it's maybe just a temporary short term win. So let's start off with the market leader, JPMorgan Chase. JPMorgan Chase reported a $57 billion net, that's over $1 billion per week in profit. Their market's revenue was up by about 12 billion just last quarter alone. And the most important takeaway is that JP Morgan pretty much wins in any environment, right? In every environment, they win. In a stable economy, their lending business wins. In a volatile economy, their trading business wins. In a very, very good, strong economy, everything that JP Morgan does wins. And they're more like a benchmark within the market. And you can see how the stock price has performed year to date. And I think the most important thing that people should not miss is that even with all the strength that JP Morgan has, there's still some cautiousness. And you could listen to the CEO. He's always talking about they're watching inflation, they're paying really, really close attention to the geopolitical landscape, and they're also paying attention to the market valuation. So what the biggest bank in America is saying like right now things are looking good. The market is at all-time highs, but do not get too comfortable. So that is the key message right there. Let's go to the next bank, Bank of America. Bank of America reported $113 billion in revenue, and they saw some really strong growth in their net income, where they reported $31 billion in net income, and their trading revenue was also up in the double digits. Now, the interesting thing about Bank of America is that it showcased that spending is still happening and clients are still active. But the problem that I had with Bank of America is when I looked at their stock price, the stock hasn't really kept on going up. Now, this is critical because as someone who's an investor, I'm looking to see why a company can post really good earnings and still be a weak stock. Is it because investors are seeing their activity as something that they might not be able to repeat, and it's something that's just temporary, or they're looking for more signals to see if they can actually continue on that trajectory? So that is one thing that I kind of like took away from Bank of America. Now, let's talk about Morgan Stanley. Really strong revenue, $70 billion, Their net income was $17 billion. Their equity tradings business reached record highs, and their investment banking business was up over 36%. Now, where it gets interesting for Morgan Stanley is that Morgan Stanley is leveraged to the market. So when trading increases, deals pick up and they move very, very fast. And you can also see the performance of their stock price right here. Now, every Sunday, I have um, a live stream here on YouTube where I dive deeper into the stocks that are going to be moving the markets during the week. And the link to the live stream is in the description. So be sure to join that because we cover a lot and more on these live streams. Now, back to the banks. Number four, Goldman Sachs. They reported $58 billion in revenue. Their net income was actually quite strong at $17 billion, and their equities trading business was also at record levels. Now, what's interesting about Goldman is that if deal making is back, they win. But here's the nuance: their trading business was weak. So the market, I think, is still asking, is this a full recovery from a Goldman Sachs performance, or it's just selective strength, right? So more to come on Goldman Sachs. Now let's go to Wells Fargo. Wells Fargo reported $83 billion in revenue and $21 billion in net income. Their loan growth is back. Their banking business is also up, but they missed their expectations, and the stock obviously reacted negatively. So, the big lesson that I see is that the market doesn't necessarily reward progress. The market rewards clean execution and beating your expectations. Wells Fargo is improving, but the market still wants proof to see can they deliver on what the market was expecting. And then the last one that we're going to dive into is Citigroup. Citigroup reported $85 billion in revenue, $14 billion in net income, and the stock is actually up 100% versus last year. This is a really, really good, strong story. Strong market revenue, really, really good execution, and also there's been really explosive stock performance. So, what does that all mean for us? Well, here's kind of like how I'm looking at the landscape. JP Morgan is this big fortress, it has a lot of stability. Bank of America, really, really broad exposure, and it needs to prove to us that they can deliver. Morgan and Stanley, they're benefiting from the market upside. Goldman, deal making is back. Wells Fargo, it's getting back into things. And obviously, Citigroup is doing its thing. Now, this is where things really matter for you. Going into this year, analysts are focused on three things. Number one, are we going to see a continuation in deal making? If yes, Goldman Sachs and Morgan and Stanley are going to benefit the most. The second thing that analysts are looking at is net interest income going to be stable? Higher rates means that the banks win. And then the third thing is the credit quality. If the credit quality cracks, everything changes. So we're hoping to see that people continue to pay back their loans. So the real question is, are banks strong because the economy is strong, or banks are currently strong because of the volatility that's out there, which is temporarily raising profits? That's the big question. So that's something that I think we need to watch over the next few weeks. And the key takeaway here is that banks are not signaling a collapse. They're also not signaling comfort. What the banks are saying is that business right now is strong, activity is there, but the risks are also rising. So instead of thinking that banks are good or banks are bad, what you should be thinking is, which earnings engine do I want exposure to? And we already discussed which ones are important for which bank. And like I said, every single Sunday, I do a live at 7 p.m. right here on YouTube. So we're going to be looking at this situation very, very closely. And we're going to be looking into key levels, market structure, and exactly what to watch going into the week. So you can actually see in real time how this story evolves. So make sure that you subscribe to the channel. And hopefully, I'll see you on the live stream on Sunday. And also remember, every 2 weeks, I have a trading boot camp, and the link to my boot camp is right here in the description. So I look forward to seeing you there as well. Take care.